The stock market, the economy, the soft landing, and consumer spending are all exceeding economists' expectations. Let's get some common sense from Craig Bolanos, the CEO and founder of Wealth Management Group. Craig, good to see you. As investors are deciding what to do with their money, especially in the market, what are you watching?
Well, let's take a look at what the data is pointing to so we can actually have some clues as to what might unfold and we can invest better as a result. So number one, the University of Michigan Consumer Sentiment Survey. Well, it came out in the month of January and it showed that at the end of the year, everybody was in holiday bliss because the consumer sentiment survey was the best it's been since we reopened from COVID in the summer of 2021. Stack on top of that, though, something different, the Conference Board's Consumer Confidence Report. There's a mouthful of consonants. And at the end of January, so just the other week, it showed that consumers, well, they're planning to slow down their spending on big ticket items. Think automobiles, appliances, etc. in the next 6 months. Number 3 on the list, I can't look past it, revolving credit card balances. They're up 15.6% year over year. In fact, in America, we finally eclipsed the 1 trillion, that's trillion with a T mark, because there's now 1.21 trillion sitting in outstanding credit card balances. Last on the list of checking out the health of the consumer, we got to pay attention to the savings rate, because since 1950, the savings rate has averaged about 8%. But there's a key indicator that people pay attention to on the street, and that number's 5. And I got bad news. The U.S. consumer went below a 5% savings rate to start this year, 2024. What does that mean? It usually indicates slower spending to come in the next 2 to 3 quarters.
That could be worrisome, but then again, people who have been worried about the economy, worried about the stock market, have been in the wrong camp. So do you think the consumer is likely to slow down that spending, and can the market continue to power ahead in 2024?
Well, Angela, you and I spoke not that long ago on this program about the fact that history shouldn't be a mystery. So here's the bottom line as we see it playing out. The consumer's likely to slow. The pandemic era stimulus, the CARES Act, the American Rescue Plan, zero rate interest policy, it's all over. It's in the rearview mirror. But we were just reminded recently that January was a very, very strong month for jobs, once again exceeding expectations. And if we're going to continue to have strong jobs, but the consumer is going to be limited because higher interest rates, the resumption of student loan payments, higher revolving credit card balances. Yeah, the money tree in the backyard, it's not just dropping as many leaves or dollar bills. I think we do expect the consumer to slow down their spending. There's a lot of moving parts when it comes to finance. There's a lot of things that need to come together to drive a conclusion. And if you want some help bringing clarity to something that is oftentimes complex, we can do just that. We exist to help people like you and your family get retired and stay retired. So give us a call, 833-WMG-PLAN, or go out to our website, investwithwmg.com.
Go to businessfirstam.com for where to see our show on TV.